The home loan is over, but have you really become the owner of the house? If you forgot to collect these 5 documents from the bank, you could get stuck later. It is around 9:30 at night. The bank app is open on your phone. The last EMI has been debited. And on the screen you see that line you may have waited 15, 20, sometimes even 25 years for. Your heart says, that's it? Now the house is completely mine. But this is exactly where the story takes a dangerous turn. Because in India, paying the last installment of a home loan and getting full legal control over the property are not always the same thing. This is where many borrowers make a mistake. The moment the EMI ends, they think their relationship with the bank has ended too. But the truth is that if you did not collect some important documents after loan closure, did not get certain records updated, and did not get certain entries cleared, then that same house can become a problem for you later during sale, transfer, refinance, inheritance, or legal verification. Even the RBI, in its directions dated the 13th of September 2023, clearly said that within 30 days of full repayment or settlement, regulated entities must return the original property documents and remove registered charges, because this is the stage where the most disputes and grievances had been arising. Just think, you spent a large part of your salary on EMIs for years, held back family needs, postponed vacations, and kept savings carefully protected so that even in emergencies no payment would be missed. Now the loan is over, but a few months later when you go to sell the property, the buyer's lawyer pulls out the registry record and says that the property is still showing with a charge. Or one day you realize that the original documents were in the bank file, but you never actually received them. Or your credit report still shows the loan as active or, even worse, settled. That is when you understand that the real closure of a home loan happens not through EMI, but through paperwork. That is why today's story is not just a list of 5 documents, but the story of that invisible trap in which even educated, financially disciplined, and responsible people get stuck. The first and most important document is the No Objection Certificate, which many banks also call a No-Do certificate. This is the paper that practically and legally proves that you have paid the lender in full, the loan account has been closed, and the lender no longer has any claim on the property. Both ICICI Bank and HDFC, in their home loan closure guidance, have included this among the most important documents. RBI's broader framework also moves in the same direction, that after loan repayment, closure formality should be clear and time-bound. This NOC or NDC must correctly contain your name, property address, loan account number, loan closure date, and a declaration that the dues have been fully paid. A lot of people make a dangerous mistake here. They do take the certificate, but they do not verify the details. Later, spelling mismatches, wrong flat numbers, old addresses, omission of a co-borrower, or mistakes in the loan account number can create problems in future transactions. So this paper is not just meant to be collected, but also read line by line. Now come to the second document, which people often take lightly because it feels obvious. But in reality, it is the heaviest asset of all. Your property's original title documents. A home loan is a secured loan, which means the bank gave the loan because it held your original property papers as security. That is why during the loan tenure, things like the sale deed, title deed, allotment letter, builder-buyer agreement, conveyance deed, power of attorney, chain documents, possession-related papers, and sometimes even approved plans remain with the lender. After loan closure, taking them back is your right. And according to RBI's 2023 directions, regulated entities must release original movable or immovable property documents within 30 days of full repayment. If the delay is from the lender's side, the borrower may have to be paid compensation of 5,000 per day. Just think, RBI had to bring in such a specific penalty structure because delays and disputes at this stage had become common. This clearly means one thing. Getting your documents back is not a courtesy, it is a regulated responsibility. But the real wisdom here is not just in receiving the documents, but in verifying them. When the bank returns your file, do not treat it like a hurried formality. Physically count every document. Is the sale deed there or not? Is the conveyance deed there or not? Is the allotment letter there or not? Is the builder-buyer agreement there or not? Are the previous owner's chain documents complete or not? Is there any staple damage, stamp damage, tearing, moisture marks, fading, overwritten notes, or missing annexures on any page? This may feel boring, but a missing annexure can sometimes stop future due diligence. A damaged deed can raise objections during mutation or resale. If any paper is lost or damaged, RBI directions say that the lender must assist the borrower in obtaining duplicate or certified copies, bear the associated costs, and the prescribed compensation provisions may also apply. In other words, the attitude of "we'll see later" can prove the most expensive here. The third thing is the formal closure of lien, charge, or mortgage release. This is the part that many borrowers do not even know about. They think that once the NOC is received, the matter is over. But in many cases, the charge that was registered on the property also has to be removed from the records. In its 2023 circular, RBI clearly said that lenders must, along with returning original documents, also remove charges registered with any registry within 30 days. In some cases, this is reflected in local sub-registrar records, in some through CERSAI filing, and in some through MODT or state-level processes related to equitable mortgage. CERSAI itself recognizes the concept of satisfaction of charge within its registry framework. The direct meaning of this is that after repaying the loan, just the internal closure at the bank branch is not enough. Satisfaction of the registered security interest is equally important. If this step remains incomplete, then any future buyer, new lender, legal heir, or lawyer conducting due diligence will say that the property is technically still showing as encumbered. This is where a subtle but very big mistake happens. Many borrowers think that removing the charge is the bank's job, so they do not need to do anything. Sometimes the bank processes it, but in many cases the borrower has to follow up with the branch, registrar office, or specific filing trail. So do not ask only, has the loan been closed? The real question is, has the charge satisfaction been filed? Has the registry record been updated? Will I get an acknowledgement? Has the release been reflected in CERSAI or the applicable registry? This language is a little technical, but property ownership itself is technical. In the world of papers, emotion does not work. There, either the entry is active or it is discharged. There is no romantic middle zone. That is exactly why the third pillar of home loan closure is the formal removal of lien or registered charge. The fourth document, which the common person talks about very little, but smart property buyers and lawyers understand very well, is the updated encumbrance certificate, or in many places, the practical need for an updated non-encumbrance certificate. The encumbrance certificate basically shows the trail of registered financial transactions and encumbrances on the property. ICICI Bank has clearly written that after loan closure, one should visit the sub-registrar's office and obtain an updated non-encumbrance certificate so that the closure is properly reflected in it. This paper is extremely useful in future verification, especially during sale, fresh mortgage, legal scrutiny, family partition, or title search. If the encumbrance certificate is still showing the old mortgage entry, the buyer's side immediately raises the question, was the loan really closed or not? That is why having the NOC with you is one thing, and having a clean reflection in the public record or registry trail is another. Understanding the difference between the two is very important. Now imagine this. You kept the NOC in the drawer, kept the original papers in the cupboard, but never got the updated encumbrance certificate. 2 years later, suddenly an urgent deal comes in. The buyer is ready, the price is good, but the lawyer's search report traces the old encumbrance. Then begins the drama of running to the branch, running to the registrar office, searching for old acknowledgements, and the buyer's confidence slowly starts fading away. In the Indian property market, deals do not close on price alone, they close on paper clarity. A clean title, complete chain, release charge, and updated encumbrance certificate give the buyer confidence that the asset is legally clean. That is why an updated encumbrance certificate is not a luxury. It is post-loan hygiene. It is one of those things people do not get done on time, and later when they need it, they rush to do it like an emergency. The fifth thing is unused post-dated checkbooks, security checkbooks, and in today's digital age, closure of repayment instructions like ECS or NH mandates. In older loans, banks often used to take post-dated checkbooks. Even today, in many lending arrangements, auto-debit mandates, NH instructions, or recurring debit authorizations may still remain active. In the NACH framework of the National Payments Corporation of India, the customer-side mandate cancellation facility is explicitly recognized, and bank-level FAQs also state that mandates can be cancelled or amended. The practical meaning of this is that after the loan ends, you should confirm that any future auto-debit authority has also been shut down. If the bank still holds unused checkbooks, take them back. If an e-mandate is active, take its cancellation acknowledgement. Because in financial systems, an old instruction sometimes remains alive unexpectedly, and then the borrower keeps wondering, if the loan was closed, how was money debited again? One more subtle difference must be understood here. Some people treat loan closure as just a branch-level, verbal confirmation. Some relationship manager says, "Sir, your loan has been closed," and they breathe easy and move on. But real financial discipline says that until every debit instruction is shut down, every security instrument is accounted for, and every document has been handed over with proper documentation, do not treat the closure as complete, especially at a time when one extra auto debit can disturb your account balance, trigger bounce charges, or create an unnecessary dispute. That is why home loan closure does not mean only the end of debt. It also means the shutdown of the repayment ecosystem. Now comes perhaps the most underestimated but future-oriented part of the story. Credit report update. The loan is closed. The papers have been received. The charge has been released. But if the credit bureau records still show the account as active, then for a future lender, the picture is still not clear. ICICI Bank, in its closure checklist, says that it may take around a month for the lender to communicate the loan closure confirmation to the credit bureaus, and after that, the borrower should check the credit report. In the educational guidance of TransUnion CIBIL 2, it is clearly explained that if the loan has been fully repaid, then the account should be reported as closed, whereas if it was compromised at a lower amount, then it may show as settled, and a settled status is considered negative for future loan approval. This means that even if you have been financially disciplined, if the bureau record is wrong, your credibility can still be affected. That is why the credit report must definitely be checked around 30 to 45 days after home loan closure. Many lenders report updates in monthly cycles, so instant reflection is not always possible. But even after a reasonable time, if the account still shows as active, or worse, shows as settled despite full payment, then you should immediately raise a correction request with the lender using the NOC, closure proof, and repayment evidence. Even in CIBIL's example, it was shown that after clearing the outstanding amount later and obtaining the NOC, a dispute was raised and the status was changed from settled to closed. This is not a small thing. Tomorrow, if you take a top-up loan, an education loan, a business loan, or become a co-borrower with a family member, this very line will work either against you or in your favor. Now, one practical question comes up. Is RBI's 30-day rule limited only to the return of documents? No. Its spirit is broader borrower protection. In its directions, RBI also said that borrowers should be given the option to collect original documents from their preferred office. The return timeline and place should be mentioned in the loan sanction letters. And if the delay is from the lender's side, compensation should also be given. Not just that, if the original documents are lost or damaged, the lender will have to assist in obtaining duplicate or certified copies and bear the costs. All of this exists because in India, property papers are not just papers. They are the backbone of legal existence. You may have the house, you may have possession, the electricity bill may be in your name, but if the title trail is messy, then the comfort of ownership remains incomplete. If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.